Dave Nadig, Director of ETFs at FactSet. Great to see you here in your fishing gear at Camp Kotok in Maine.
It's great to be here. It's just beautiful.
In your day job, of course, when you're not out fishing, you look at the ETF market very closely. What have we seen in terms of inflows? I know July was really a bit of a turning point.
It was. We saw as much money flow in July as we really saw for the rest of the year. And I think importantly, it was classic risk-on investor money. It was domestic and international fixed income, domestic and international equities, even commodities saw good inflows. And that's very different than what we saw for the first half of the year, which I would say was really characterized by fear. A lot of movement into gold, a lot of sort of tentative picking at sectors of the market. Now I think we've really seen sort of a return of the institutional and advisor market to the ETF market.
It's interesting. I mean, do you know of what might have turned it? Was it just we got through Brexit or something?
I think there was a relief rally from Brexit, certainly, and while that may not have been huge across all the equity markets, I think it was an emotional rally, if you will, that made people feel okay putting money to work again. I think that's a big part of it.
What are you seeing in terms of the ETF industry as the biggest trend right now for ETF creation or inflows?
Really two things. Smart beta, that sort of bridge between active and passive, where we're looking at quantitative strategies, factor-based strategies. There's been tremendous product creation, literally hundreds of products in that sector of the market now. A couple of new ones launching almost every week. Some of those are getting traction, some of them are getting some real money, but that's definitely where the creations are. I would say the flip side of that is ESG, sort of environmental, social, and governance-based products. We've seen a real resurgence there. A lot of people launching new products, or at least announcing new products there. Oppenheimer launched or has announced a few ESG-based products of their own. So coming from all different sectors, not traditional ESG players. I think that's really interesting.
One other issue with ETFs that we should always address is liquidity, because some ETFs, they don't get the traction. So of an ETF that gets created, when you look at the whole universe, how many shut down?
Yeah, we've seen roughly a few hundred open over the last couple of years on an average year, and maybe half of that close. So it's definitely the case that issuers are willing to take product out of the market if it doesn't get traction with investors. It's important to point out that even if you're in one of those funds, it's not like you lose all your money. It's like a mutual fund shutting down, and usually it's a very orderly process. But it's definitely the case. It's a big, crowded market. 1,900 ETFs in the US right now. There'll probably be 2,000 by the end of the year. That's a lot of competition. Not every product's going to hit.
And how would you describe liquidity overall?
It's very concentrated. The top 20, 30 ETFs have the lion's share of the liquidity, and in fact, those top ETFs, the SPY, GLD, they're some of the most liquid securities in the whole world. So at that end of the market, they're hyper-liquid trading vehicles, but there's still a really solid mid-core 800 or so ETFs that are very ownable and tradable for the average investor. Where it gets tricky is some of the smaller products, particularly a new product that may be seeds with $5 or $10 million. They can sometimes have a real problem getting that initial liquidity. So you just have to be careful trading them. If one of those smaller products interests you, you just need to be a little careful.
Dave Nadig, we'll end it there. Great to chat with you.
Thanks so much.